Hi, welcome back to Westbury 101. I'm Brian Westbury, Chief Economist at First Trust Portfolios. Remember, we want to be the antidote to conventional wisdom. Well, happy anniversary. 365 days ago, the stock market bottomed on March 9th, 2009. Since then, the past 365 days, the Dow is up a little bit over 60%, the S&P is up about 68%, and the NASDAQ has risen 84%. Huge market rallies. And remember what kicked all of this off, and that was the rumors on March 9th of a March hearing, which eventually took place, that held FASB to account for its mark-to-market accounting rules. Now remember, this hearing was in Barney Frank's committee. Actually, it was held by a subcommittee of the Finance Committee. That subcommittee was headed by Representative Kanjorski from Pennsylvania. Both Barney Frank and Representative Kanjorski hammered FASB that day to get them to change the mark-to-market accounting rules. Really not change, correct them, allow financial institutions to use cash flow to value assets when there was no liquid market price. This changed the whole complexion of the stock market. Everyone in the financial industry understood the impact of this, or virtually everyone. And within months of that change, financial institutions were able to raise over $100 billion. Financial institutions saw their earnings turn around. Financial stocks have been on the rise, and the stock market has been on the rise. And in addition to all of that, the economy has turned around. It looks like June was the end of the recession, June of last year, June of 2009, and that the recovery is well underway. Now, remember what we were saying back then. We felt that we were in a panic. And panics always end with a V-shaped bottom. The last time we had a panic was in 1907. It ended with a V-shaped bottom. The stock market declined in 1907. It rallied huge in 1908. That is exactly what we have seen this time. In fact, the economy's recovery is well underway. But remember the second thing that we were talking about back then, and that is that underneath all of this stuff about financial crises and mark-to-market accounting and what the government's going to do with health care or cap and trade or stimulus or any of these things, underneath all of it is the entrepreneurial spirit of the American economy. We do not get growth, we do not get wealth creation without entrepreneurship, without innovation and creativity. And one of the things that has become clear in the middle of this panic and this recession is that productivity is booming. The technological revolution that we have experienced over the last 25, 30 years is really hitting its stride right now. Communication speeds are picking up. The types of items that we have that are connected to the World Wide Web, that are connected to each other, literally is causing us to increase our productivity by leaps and bounds as we sit here. And that did not go away in the middle of the financial crisis. And that's one of the things that people forget. What happened was that mark-to-market accounting was creating a vicious downward spiral which never would have stopped if it wouldn't have been for Barney Frank and Representative Kanjorski. So we applaud them today for sensing and seeing that and changing and helping to change those rules and move them in the right direction. We're now reaping the rewards. Now the question is, where do we go from here? And our belief is that we continue to go higher. You know, the Dow forecast for us at the end of 2010 is we expect a 13,000 Dow. I believe that the market's fair value today for the Dow Jones Industrial Average is 14,500. Remember, that's using a 5% Treasury rate, not the current rate of 3.8. So we're incorporating higher interest rates and higher inflation into our models, and we still see a Dow that's fairly valued at about 14,500. Now, some people are saying, oh no, this can't be. We're going to have a new normal. There's going to be a double dip. But if, by all accounts, every piece of data is getting better. For example, consumption in January. Remember, this is personal consumption expenditures. All expenditures by U.S. consumers hit a new all-time high. We had peaked back in August of 2008, had panicked and saw even food sales decline, and now we have fully recovered, and we are now back buying more as a total in the United States. Consumers are spending more today than they have in any period ever in our history. And what's interesting is that's occurred with higher unemployment, higher savings, and less borrowing. Imagine when the unemployment rate comes down, savings rates stop going up, and borrowing starts picking up. My belief is that the economy has even further and faster to grow. The unemployment rate stayed relatively flat, even in the midst of nasty snowstorms, and household employment is up over 800,000 jobs in the last 2 months. That is a key sign of a turning point in the economy. We expect the March jobs report to show gains of 300,000 plus. We also expect the unemployment rate to begin coming down rapidly, and we expect it to be down in the 8.5% to 9% range by the end of 2010. All of this began 1 year ago today, and the real thing that kicked it off, that allowed this recovery to begin, was the changes in mark-to-market accounting. So we wanted to honor that anniversary today. So enjoy it, and enjoy the market run that's still to come. Thanks for visiting with us. See you back next time on the next Westbury 101. Remember, we want to be the antidote to conventional wisdom. Take care.